Okay, welcome students, traders, and associated various people out there who may have just encountered this video. This is, again, it's a very quick video, but it's a very important video in terms of trading. Um, I think when I first started trading, like a lot of people, I thought, oh, we could just do a cumulative approach to managing risk with our trades. And unfortunately, over the long term, uh, forever increasing the lot size, adding to the lot size, it will come back and it will bite you at some stage. The reasoning behind that is that risk winners and losses they tend to vary. They vary on a statistical basis. So you can be the best trader in the world, and you can have a series of losers, and you will experience that at some stage in your trading life. The markets don't run consistently all the time. And in fact, what we are doing is we're trading what's called a statistical edge. And so that edge may play out, and you may encounter conditions where, for a period of time, it might not play out as much as you would like it to play out. So we have to be aware of this, and we have to also manage our risks in trade proportionately to that, especially in respect of a funded account, because if you are going to qualify for a funded account, the worst thing you want to do is to trade that a funded account, put on too much risk, make too big a loss, and lose access to that funded account. And in fact, you'll find that funded accounts come with very strict conditions in terms of daily losses and in terms of overall losses. Also, in respect of taking a funding exam trial as well. For example, one of the conditions is you're not allowed to lose more than 10%. Otherwise, the trial's over, the money you paid for that trial is over, and that money is gone. So it behooves you, that's the word, isn't it? It behooves you to use proper trade management and by proper trade management, I mean making sure that the amount of money is at risk is within various tolerances, is within especially the tolerances of something like a funded exam. So it behooves you to actually start your trading journey with that in mind. And there are very simple online tools that you can use with respect to calculating lot sizes and making sure those lot sizes are an appropriate percentage of your account. So I might put in this video into my YouTube channel. It's something that's general to a lot of traders, all traders out there. And if you're in my group and you're beginning trading, then I'd like you to use a lot size calculator. Always understanding what's at risk, what the wins are. We're going to become Sun Tzu art of war traders, and in the art of war, we understand risk. We understand what we are likely to risk, what we are likely to win, and this is a useful tool that will help you to do that. So, without that more in mind, what I'm going to do is I'm going to share my screen, and I'm going to go to a lot size calculator, and just give me a second. Okay, not the Discord. So I'm going to go to this particular area. And one of the windows that I have open is cashbackforex.com, cashbackforex.com/tools position size calculator. And what I will do is I will drop this link in I'll drop this link in the description of the videos because it's a very useful tool. What you're able to do is you can go to anything that you might trade. Anything that you might trade is actually here. So if you want gold, you can type in XAU USD, and it's toiling away on the computer. Sorry, I've got a few things open, so it's toiling away. But you can essentially find that, the instrument here, and it will find that. I'm sure you it will find it. You can put the stop loss amount in pips. You can put in your account balance, how much you've got in your account balance, your funded account, and you can, or you can actually switch between calculating the stop loss, and you can switch to the open price and your stop loss price. You can put in the amount of risk that you would like to take on board for that particular trade. Now, professional traders, and this is going to seem a little conservative to a lot of people out there, but professional traders, yeah, if they're scalping, they might only risk 0.5%, for example. If they're in a trade, they might want to go a normal trade. They might want to go to 1%. But you can put in whatever your risk percentage is. This is the last one that I took on board. I'm going to switch it to stop loss in pips. So if you're unsure of the number of pips, then you can literally put in the stop loss price and the price at which you're taking the trade, put in the risk percentage, ask it to calculate that risk for you. And if I scroll down, so if I say I want 50 pips, for example, as a stop loss, I ask it to calculate that, you can see that the lot size just dropped down to 0.7999. I would then go to MetaTrader, and let me just check that I'm sharing the right screen. I'm hoping that you can pick this up in MetaTrader. So you can literally click on New Order in MetaTrader, and volume is the equivalent of lot size. You put in the lot size that you've created in Cashback Forex, and you can either, and then you put in the stop loss that you've got in mind, or you can put it in a pending order, either a buy limit or a buy stop. Essentially, a buy limit is where you're buying below price. A buy stop is where you're buying and you're hoping for price to come into an area above price. So you can put in your buy limit, you can put in the volume, you can put in your stop loss, you can put in the price at which you're buying and press place, and that will place and automate that order. If you want to take that order at market execution, so at the current price, literally you just put in your stop loss and you hit the buy and the sell button. It is literally that easy to get yourself into a trade. So always get in the habit of risk management. I think one of the students has got a $10,000 demo account, and so if he was taking a trade in Cashback Forex, taking a trade in MetaTrader, it doesn't matter what the instrument is, so long as he goes to Cashback Forex, puts in £10,000 there. So if I put in 10,000, you also get to put in the currency and the account. I trade US dollars, but you can put in, you can change that over to GBP, and it will find a British pound, and it will calculate the lot size 1% of that with a 50 pip stop loss. If I calculate that, then it tells me exactly what the lot size is and how much money at risk, which is 1%, which is £100 per trade, which was within tolerance, and it's within professional tolerance. If you've got, if you've blown up the account a little bit and you've got a little more money, then you might want to go to 2%. So we can literally take that same trade with a 2% risk. We can calculate that, and it doubles the lot size. and it lets you know exactly the money that's at risk. So I hope you find this useful, and I'd like anybody who's trading to start off with proper risk management. This is the way that you do it. Thank you for taking the time.